Hi guys, welcome back. So today we're taking a look at some of the Chinese index as well as the respective ETFs. Before I begin, we will take a second to give the video a like and subscribe as you greatly help our channel. Without further ado, let's first start off with the Hang Seng Index. So you can see that the Hang Seng Index actually climb up further this week and ended the week on the high around 21.7K. So this puts us in a very good position to actually retest the 22,000 psychological resistance next week and potentially reclaiming back this 22,449 recent high, which was back in June-July period. So as of now, we are looking good, even though it seems a little bit toppish for now. But do not underestimate the buying pressure. So long as there is no bad news, it's likely for us to actually revisit this recent high here. So looking at the supports level, we are looking at the first support at around the 20.5K at this blue conversion line. And thereafter, it will be this red baseline around the 20.2K levels. That said, obviously, the 21K psychological support level is a critical support level that we have to hold. If we are able to hold it, then potentially we may see more upside to it. So let's move on to the Hang Seng Tech index. So you can see that the Hang Seng Tech index is slightly weaker. The Hang Seng index has already moved up this 78.6%, while the Hang Seng Tech is actually looking at a very strong resistance at this 78.6%. In the event that we can clear it, potentially looking towards the 5,000 psychological resistance target, and pretty far away is around this 5137. So for now, the blue conversion line and the red baseline has caught up slightly. So we're looking at around the first support around 4330, and the second support is around 4293 levels. What we want to see is this previous resistance. This previous resistance was sometime back in 9 December. And the high back then was around 4390. So in the event that we actually come back down to test this 4390 levels, we want to see the previous resistance turning to support, thereafter potentially climbing back up even higher from here. So let's take a look at some of the ETFs. So we start off with KWEB. So for KWEB, recent low was around $17, and the recent high, we can take it around $50, $52.45 to be exact, and the recent low was $17.22. So it is 50%. It's a very key resistance, as mentioned previously. Not only is it Fibonacci 50% resistance, we're also looking at a potential recent high here around $34-$35 levels. So we may see a bull trap where the market makers actually push up the ETF, only to bring down thereafter in the event that too many breakout traders were to take this trade. So looking at the support levels, we are looking at this first support around 32.63. And the second support is around 32.18 levels. So the $32 is a critical support that we have to hold, which is also this previous resistance here. And it's also this previous resistance here. In the event we can come back down, previous resistance turn to support, that will be a good sign for us. Likely to be heading towards the next Fibonacci resistance at $39 and potentially $45 if we manage to clear the $40 psychological resistance. So let's move on to CWEB. So CWEB is slightly a very similar situation. You can see that this was previous top here, and we're at 78.6% at 66.71. So it's a very similar situation to the Hang Seng Tech index, where we are at 78.6%. If we can actually push up forward, heading towards a $70 psychological resistance, and even potentially hitting the near-term target of $80. That said, we're looking at a struggling pattern here. And for now, it seems like a fake breakout above this critical resistance around $68 or $67, $66. So if we can't clear this resistance convincingly, it's likely for us to pull back down to actually this blue conversion line, and red baseline is currently around $58 and $59, just below the $60 psychological support level. So lastly, let's take a look at FXI. So for FXI, we actually just hit the 78.6% resistance target at around 31.84. And you can see that there's somewhat like a pullback just yesterday itself. And no surprise, because this is also the recent high here. And this is some resistance to clear. If we can actually clear it, then potentially we may head up towards 34.83. For the support to watch even now, currently is the $30 psychological support level, which is somewhere near the blue conversion line and also the red baseline as well. This was the recent high around 29.50, so we want it to previous resistance turn into support on the way down before potentially climbing higher in the event that we do see a pullback. So overall, the Chinese market seems to be pretty bullish. But when the market is too strong, it's likely to be pretty weak at the same time, where we may come to retest the recent highs of 22,449 for the Hang Seng index potentially next week, in the provided that there is no bad news that hinders us towards this 22,449 target next week. So hopefully we see buyers stepping back in next week and no ugly looking red candles forming up. So if there's any changes, I'll give you guys an update. Thanks for stopping by. Till we meet again, appreciate the manipulation.